Credit is a hot topic. How do you use it? What does it mean? If you don't know anything, where do you start? So let's begin by defining what do we mean when we say credit. It can mean a couple of things. Your credit report is a history of everything that you've done, what you've borrowed, what you paid back, how you paid it back. Your credit score is a 3-digit score that identifies whether or not you're a good credit risk. It can be very unnerving when we think about what credit means in our financial lives, but it's really important and it does matter. So let's talk about what do you do and where do you start. The first things that I want you to do is think about what are the steps that you can take to establish, build, or maintain positive credit. So when we think about what goes into a credit score, there are actually 3 reporting bureaus: Equifax, Experian, and TransUnion. And they provide information to the credit scoring companies that are FICO, Fair Isaac Company, and VantageScore. And your score can range from 300 to 850. The range of bad to excellent credit score differs between the different scoring companies, and it really provides an overview of where you are in your credit journey. Below 600 would be considered bad credit or poor credit. Above 750 would be considered excellent credit. Most lenders really like for you to be somewhere in the 720 range when you're thinking about a mortgage, so that gives you an idea of what you might be shooting for if getting a home or purchasing a home is one of your goals. So now that we know why this credit score thing is so important, how do you figure out what goes into your number? 35% of this credit score is your payment history. Do you pay on time? How many accounts do you have? 30% is the amount of debt that you carry. And what that means is if your total available credit is $2,000, how much of that are you using? 15% is the length of credit history. How long have you had credit, and how long have you had the accounts that are actually in your credit file? 10% is the mix of credit. Do you only have consumer debt? Do you only have credit cards? Or do you have a mortgage or an auto loan or a personal loan? That final 10% is new credit. So when you go to the store and they say, do you want to open a card and save 10%? Yes, you might save in the short term, but it can actually cause your credit score to dip for a bit. Now, is it fatal? No, it'll generally come back as long as your payment history is what it should be. So if you do open a new credit card or new credit account, just make sure that you can afford to maintain a good payment history by charging only what you can afford to pay. So now that we know what credit is, how do we manage our credit and use it wisely as part of our overall plan to actually build assets? Your good credit will be very important when you want to purchase a home or any other large purchase. Paying your consumer debt or your credit cards as part of a monthly budget can really be beneficial, especially if you love points. Using credit cards for consumable items or for regular monthly expenses that you're not able to pay off each month can indicate that you're spending more than you can afford to, and so you might want to revisit your budget. Remember that federal law really gives you the right to see all 3 of your credit reports every 12 months, not calendar year, every 12 months. And so you want to order each of the 3 bureaus and look at your reports every year. To check your credit score, you can go to Chase Credit Journey and get your free credit score. You don't have to be a customer, it is available to anyone. Now, who gets to see your credit reports besides you, of course? Employers, insurance companies, even for auto loans and home, landlords and utility companies. Any lender that's thinking about loaning money to you can check your credit report to do that. You also want to keep in mind that if you're in a field or in a job that you have a security clearance, your credit report is very important. So what is included in your credit report? All of your personally identifying information, any trade line or any credit that you currently have, and even your past credit accounts. Any credit inquiry, which means every time you apply for credit, they check your credit score, and that shows up in your credit report. When you check your own score, that is never counted against you. That is called a soft inquiry, and it does not harm your score. When you make a credit inquiry to ask for credit, that actually can decrease your score, so be very thoughtful about those choices. Any public record or collections, tax liens, those types of things are also going to be reflected in your credit reports. What's not included in your credit score is also important. Your race, gender, age, your income, unless you provide it, your marital status, your job, or the neighborhood you live in. Of course, they have your address, but your neighborhood, those kinds of things are not in your credit reports. So what if you have no credit or you have a thin credit file? To establish a FICO credit score, you need at least one account opened for 6 months or more, and one account, it can be the same one, reported to the credit bureau in the past 6 months. So managing your credit report is just as important as managing your daily budget. You want to make sure that you review your credit reports annually to make sure that your report is accurate. Have creditors add any positive information that might be missing from your account. Now, if you check your credit reports and there are some things that are not positive there, what you can do is, number one, if it is true, you can write a letter that goes with your credit reports to anyone that requests this information of you. You might have gone through some financial distress that caused late payments or other things that are negative. If that has happened to you, there's a way that you can attach a letter that explains the situation that will actually go with your credit file anytime someone requests it. So I'd like for you to think of credit as a tool that you can use to build wealth, build your assets, and move you further along your financial journey. Anytime we borrow money or we go to a lender, we're actually creating a credit file. So when you think about how you borrow, make sure that it's in the context of your overall financial goals. Borrow wisely, manage your credit wisely, because it is an asset.